Hello everyone, how are you? Hope you're okay. Today we will discuss something about the Ichimoku, some more tips trading using the Ichimoku indicator. So here I will keep only the Ichimoku indicator. I will hide. I have the 20 EMA and 50 EMA. I'll hide it. We will later on discuss about it. Okay, as I told in my previous video that you can trade using the Ichimoku indicator once the price closes above the cloud. You can go long and wait for it to close below the cloud. So I will go long once the price closes above the cloud, and once it closes below the cloud I will exit the trade. That is how you can trade a bullish stock. So for example, this is Punjab National Bank. I have taken it 53.53 once it closed above the cloud, and till now it is above the cloud itself, and it is trading at around 87. You can see this is a daily chart, and this is a long game. I mean, like you see, this from May till June, that is till May till June, it is at 53 only. So you will be wondering, at 53 I have taken, it is still not crossing the my buying price. So that is what here you have to remember is you have to have some patience also. Trading is about having some patience too. And once it has not closed below the cloud, it went on to be a very bullish stock, and then it went on to become a go to 87. That's quite a profit. And of course it's a time also. You can see from May and now till December, that's almost a 6 months trade. So you have to trade according to your own time, and depending on the quantity that you have taken. Okay, now there are few tips that you can trade with this. That is, once you become bullish, you can actually exit the trade at a place and again re-enter at another place. That is, once this blue line and red line comes close to each other, the stock becomes really bullish and goes up, making the blue line and red line to move apart from each other. Then it forms something in Ichimoku that's called the C section. It appears like a C, and it's called a C section. Once it comes to C section, it generally the stock tends to consolidate or comes and retest this blue line or retest this red line, or it can trade below the blue line, and then again it can go up. So what I mean is, there are 2 to 3 strategies here. Number one is, once it goes beyond, once the blue line and red line goes far away, you can book the profit. And I mean goes far away in the sense, once it forms a C section, you can book the profits and wait for the price to close below the blue line, and wait for it to close above the blue line again, and re-enter the trade there. And then again, if the price keeps on moving up, and then wait for the stock to form a C section again. So that is one strategy. The second one is, you can book, once a C section is formed, you can book the trade here, and you can wait for it to test the red line. That is another. And you can re-enter the trade once it tests the red line. That is second strategy. The third one is, once it forms a C section, you close the trade there, and you can wait for the stock to test the cloud. You see, you can close the trade here, and you can re-enter when it is testing the cloud. So all these strategies, like in the first strategy, it is testing the blue line, so it is a shorter length. When it is testing the red line, it will longer length, and then if it tests the cloud, it is some more longer length. You can go with this. You can book the profits here, and you can wait for it to test the red line. You can re-enter it when it tests the red line and keep a stop loss below the cloud, or you can wait for it to test the cloud and you can keep a stop loss below the cloud. So all these strategies work out, but you have to see which one is best suitable to you. You can stick to one. If there will be some places, there will be some times where it closes, just it comes only till half of C section and then goes up again. There will be some times where C section is formed, but like the consolidation is only at this level and then again it goes up. So you have to see the stock, see little fundamentals also, and depending on that you can actually trade whether it will consolidate, and also the market conditions, how is it bullish, bearish, see, depending on that. Market has been a bearish, I'm sorry, very very bullish since October, and also after the election results it has become really bullish, and there is no stopping this any stock. In fact, most of the stocks have been doing pretty good, especially this public sector banks. Okay, so these are the few of the strategies, and you can use this 20 moving average and 50 moving average also. So I will show you the 20 moving average with the Ichimoku cloud. So you can, once the stock is above the cloud and it is very bullish, you can go long and you can keep a stop loss below the 20 moving average. Once it closes below 20 moving average, you can book it, and once it closes above 20 moving average, again you can go long again. In the same way, you can trade using the 50 moving average. You can keep a stop loss below the 50 moving average, and once it closes below the 50 moving average, you exit the trade, and once again when it closes above the 50 moving average, you enter the trade again. So this is how you can make use of the 20 moving average and 50 moving average, and also the Ichimoku cloud. The main thing that you have to remember here is the price is always above the cloud. That is, always it is bullish. I would like to make few points about the 20 and 50 moving average. I look at this 20 moving and 50 moving average as the trampoline. This, I look at this 20 moving average as a 2-year kid and the 50 moving average as a 5-year kid. You can imagine how can when a 2-year kid jumps on a trampoline, he will go a little down, and then the jump also will be a lot very higher because his weight is less. In the same way, a 5-year-old kid, his weight will be more, and once he jumps, he will go a little down, but the up move will be more higher than the 2-year kid because his weight is higher. So I look at the 20 moving average and 50 moving average like that. So it sometimes if it closes below the 20 moving average, it doesn't mean that stock has become bearish. In the same way, if the price has closed below the 50 moving average, doesn't mean that the stock has become bearish. The underlying will be bullish only. You can use it as a dip to re-enter. So you can use, that is the reason you can combine the 20 and 50 moving average with the Ichimoku cloud, and you can trade using them, both 20, 50 moving average and the Ichimoku cloud, with the help of Ichimoku cloud. So that is the also few of the strategies. And the one more important thing that you have to remember is, as I told you, the time is a factor. You have to have patience, and also once you develop a winning strategy or winning a trade system, you follow it, and you follow it diligently. You don't mix up different strategies. If you mix up so many things, you will end up over trading, and also that will lead up to losses. Once you found a winning strategy, once you found a winning trade system that you believe in, you follow it, and it will certainly give you profits, but with discipline and patience. In any sector you are in any trade you are in, discipline and uh, patience are two very important factors. Also there is some psychology involved in trading also. It's not for everyone. So please trade carefully, having a stop loss, and also uh, with the strategies that you follow, only the winning strategies. Thanks a lot for watching. Hope you have understood whatever I have told, and hope it works out for you. In future we'll come with more videos. Thanks a lot. Have a great trading day.